Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Well, here we are again, earnings season upon us, and basically the market is in a confirmed uptrend. The Nasdaq's leading the charge, and there's some concern that market breadth's weak, and that's very much true. So that just tells you you need to be in the right stuff at the right time in this market. Now, so Nasdaq's leading the market, and so far of the S&P companies that reported, 61 have reported so far. 72% have beat earnings on the earnings side, and 53% have beat on sales. So that's not so bad. And the picture is improving a little bit as well, meaning June 30th, they're looking for a decline for the quarter of a minus 4.5%. That's now increased slightly to a negative 3.7%. So of course, it's to be seen how companies report, and that's what we should be looking at. On a forward PE basis, the S&P's pegged to be maybe at about 16.8. So not really overvalued by any historical standards, probably just right there in the mean. So when we look at the individual sectors, the technology sector got a little boost last week with Google's earnings, which, big gap up, 15% up on the day, boosted Facebook followed. And also we saw similar moves in the biotech sector when Celgene bought Receptos and also guided on their earnings coming up this week. So technology and biotech continues to do very well. So looking at the sectors, we see the consumer discretionary also leading the market. If you think of stocks like Starbucks, that's reporting this week, so you might want to keep an eye on that. And we also look at the healthcare sector, the XLV, that's doing very well, being led by Celgene. Still at a buy point, stocks like Regeneron, Biogen, Gilead is still at its pivot point. So look to see how those stocks act. And the managed care space in the healthcare sector also doing very well. And also financials, it's the third leading sector we see. Stocks like BofI Holding, Signature Bank out of New York, SBNY, also doing very well. So keep your eye on banking stocks, healthcare stocks, technology stocks, consumer discretionary. That might tell you how the market's going to go. Now, energy is still lagging, utilities are lagging, industrials are not doing very well, and that's causing a little bit the S&P to be dragged on the Nasdaq. So this week also, what we're looking for is what kind of guidance the companies will give us. And these are a lot of companies I've mentioned over the last few weeks in these videos. Illumina reports tomorrow after the close. So need to see what kind of guidance they give going forward. Apple, of course, will be the big one, reporting Tuesday after the close. And then during the week, we're going to hear from Visa, Starbucks, Valiant, and Celgene, just to name a few. So it'll be a big important week, and it's sort of important that they report well, but also what their forward estimates are going to be, what management's going to say. And you need to take your cue on that, and they'll kind of tell you how the market's going to do. It's not so much really what they report, but it's kind of really the guidance they give and what they say. The market's been long in the tooth, market breadth's deteriorating, so we could crack, or we can continue to keep climbing. This is still the most hated rally ever. When I talk to anybody, whether it be traders or people on the street, they're still talking about how they're waiting for that correction. And that sort of has been going on now for maybe 2-3 years. So, as always, take a look at the earnings. Let price and volume be your guide. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Have a great week.